Hi everyone, welcome back to my channel. My name is Phi and this is Money Philosophy. Thank you for coming back for another day of Tesla analysis. Today we will take a look at Tesla daily and weekly chart together with the QQQ and the SPY for S&P 500 to see where the macroeconomics environment can take Tesla from here. If you're new to my channel, please consider subscribing. I am a growth stock investor and a trader, and I'd love to share with you my investing and trading journeys. Without further ado, let's get right into it. So it doesn't take a genius to realize that growth stock has been beaten up lately, especially those with high PE ratios such as Shopify. And needless to say, a lot of my portfolio has been decimated as a result of that. But as a stock investor, I don't think that that is the reason to quit or that is the reason to panic. I think this is an opportunity to buy as usual. When the market is most desperate, that's when you want to buy. And the exercise is very difficult, mentally speaking, because you keep pouring in capital into what is very easily described as a falling knife. But I want you to take a moment and look at the much bigger picture, especially if you do have liquidity and capital nowadays to put into the market. I also will link Adam Hu's video down below. I think he did a fantastic job of breaking down the pattern for stocks in general in years of midterm election as well as years where interest rate is potentially increasing. His assertion is that at the prospect of rate increase, the stock market would go down, but when the rates actually increase, the stock market would go back up. And he has evidence from previous cycles to support that as well. So I think that's a really, really good video to put things in perspective. And as long-term investor, this is not a reason to panic. This is the reason to buy more. I certainly have been buying more, and I will continue to do so. You will never know when the market actually will turn the corner, but you want to be in the position to capitalize on the next wave up, and that's what I'm trying to build my portfolio toward. So watch that video and I hope that you find it helpful. It's a little bit of perspective for the market as a whole. And for the rest of you Tesla shareholders whose portfolio is predominantly Tesla, if not 100% Tesla, let's break down the QQQ and Tesla right now. So here's the daily chart for the QQQ. You can see that a death cross is about to be formed here with the white line 50 days SMA about to cross to 200 days SMA, which is the red line here. There's still a little bit of a gap, about $8 gap before it closed, and the white line will cross through. That requires the QQQ to go down a little further. Now, in recent history, QQQ got to as low as about 309, and the support above that is 316. So it is quite probable that QQQ could even get there. 297 was the level last March, so it is definitely have the potential to move down further. And if QQQ continue to move down, then the white line 50 days SMA will cross through over the red line 200 days SMA here. So keep that in mind. We are still looking at a fairly bearish chart pattern. I don't know at which point it will turn around. If it does turn around now, it will make a double bottom, but there is no sign that it is turning around just yet. The volume on Friday was 90%, which is fairly decent for the day that the QQQ go in the red here. So that means that it's not necessarily a fake bearish action. It is very much a bearish price action with sufficient amount of sellers and not sufficient amount of buyers in the market. There's about 1/3 of the volume being buy volume. However, the vast majority of the volume on Friday was also was still sell volume. So once again, I don't see it turning around anytime soon, and together with futures being red right now at the time of this recording, I think that we're probably heading into a potential another red day. SPY is sharing a similar story, which is a death cross about to be formed, but the gap between the 50 days SMA, the white line here, and the red line 200 days SMA is quite significant at this point. 50 days SMA for SPY right now is 457, and 200 days SMA is 444 with an all-time high of 479.98, so almost 480. So right now, I do think that the S&P 500 hasn't been beaten up as badly as the QQQ, evidence in the bigger gap between 50 days SMA and 200 days SMA. There's a little bit of a divergence on the daily here. So while price action's moving down from 211 to Friday 218, which is the whole week, the RSI has been tipping up. So it is an initial signal that we might see a reversal, but that doesn't mean an imminent reversal just yet. The volume on Friday was 109% on a fairly red day. So it's definitely signals that there are serious sellers there. But after all, the S&P 500 was down only 0.65% on Friday. So it wasn't super significant compared to the QQQ. So comparing the two chart, I think that the S&P 500 has a much better chance of bouncing first compared to the QQQ. Right now, a very strong support is $426. And I think that if Spider hit 426 again, which is $8 down from here, it would probably bounce again. And that will make it a triple bottom. And then hopefully it will bounce back up to above 444. Any bounce above 444 would give us some hope, and any bounce above 457, which is quite a lot from here, $23 from here, that will tell us that Spider would resume bullish. But for right now, we need to take one day at a time. We need to wait to see if SPY will hit 426 tomorrow and whether it will bounce right at 426 tomorrow. Together with the divergence here, hopefully it will bounce really hard tomorrow or the day after tomorrow. But right now, chart does look bearish, more bearish than bullish, that's for sure. Before we get to the technical analysis of Tesla, you probably have heard that Elon Musk have announced that he will have a Gigafest at Giga Austin on April 7th, which happens to be Thursday, and it is a few days after Tesla announces Q1 2022 delivery results. So I think together with Q1 2022 delivery result, the opening of Austin will be a decent catalyst for Tesla stock to rise further this week, although it might just be a temporary bullish price action and send the stock right back down if macro does not cooperate. I think April 7th would be an opportunity for all of us Tesla fans to celebrate another record-breaking quarter for Tesla. And ironically, it would happen to be Q1 of a given year. Usually the major record quarter would be Q4. In 2021, as you know, almost every single quarter was a new record quarter for Tesla. So from here on out, with the addition of Giga Austin and gradually with the addition of Giga Berlin, every quarter would be a major record quarter for Tesla. And I don't see Tesla decelerating when it comes to growth and delivery anytime soon. So I'm super excited for April 7th. I highly likely will be at the event. I would love to have a tour of the facility as well. So hopefully I'll see some of you guys there. Other than that, let's get back to our technical analysis here. So Tesla is not too different from the macro environment, even though it has even a bigger gap before the death crosses form between 50 days SMA and 200 days SMA here. Right now, the stock is still trading in between these two moving averages with the inclination to touch 200 days SMA first, which is $827. Right now, it ended the week at $856, so that is another $30 to go before it hit $827. While I don't want to see Tesla going down, I feel like it needs to test the support level at 827 and see what it wants to do. If it does bounce between 827 and 796, then at least it tells me that it is still pretty strong and it has a lot of buyers waiting to buy. But if it loses 796, then I think that we are in a bear market territory. For right now, we have to take one day at a time. I think that Tesla has great potential among all other stocks in the technology sector to bounce because it has so many good things in front of it. But macroeconomics environment has been a major deterrent and obstacle for Tesla to rise significantly. On the hourly chart, I see that Tesla has been moving down for the last 2 days, and as of Friday it hit the bottom pivot point and trading around the bottom pivot point until about the last 2 hours of the day. The pivot points for tomorrow on the upper end would be 883. Middle pivot point is 859, which is right around where it ended on Friday, and the bottom pivot point is $810, which happens to be below 827 200 days SMA. So be very careful of this number tomorrow and observe Tesla carefully to see if it bounces. Once again, interestingly, we have 3 major support for tomorrow: 827, 810, and 796. If it fails all 3 support and continues to go down further, then that's definitely not good news. And you can exit all call options and probably contemplate going into put options at that point. But if it bounces at either one of these 3 levels, then the bulls still have some hope. But that's just looking at a daily price action, right? As long-term investor, like I said, it shouldn't matter. And every time it hit a support, we should be buying if we are planning to buy at any point. Now, once again, 827 is a very strong support, and I'd like to see Tesla bounce off of that. Tesla bounced off of 796 way back in earlier in February, a couple of weeks ago. So let's see if it can do that again. If it does, then that is a great double bottom and arguably multiple bottom. With futures being red tomorrow, Tesla could be affected. However, the news that Giga Austin is going to have grand opening on April 7th could potentially hold Tesla at a much higher level, possibly in the green, deep green compared to the rest of the technology sectors. Let's take a look at the weekly chart here for a little bit of a longer term picture. The weekly candle in and of itself is not that good. It is just a bearish continuation candle. I pointed it out last week, and once again, it is not a prediction of an imminent reversal. It is an initial signal that Tesla wants to reverse. I wouldn't be surprised if Tesla would hit 200 days SMA at 827 first before reversing, and I would not also be surprised if Tesla touches 796 before reversing, but I do expect Tesla to reverse and bounce strongly if and when it touches 796. That is about $60 from here. So from a downside perspective, Tesla does have a good $60 to go potentially, right? Minimum $30 it looks like to touch 200 days SMA, but potentially $60 more to the downside. And then I expect Tesla to bounce. Given a whole host of good news ahead of Tesla, I can't see Tesla going down much further. So this is it for this video. I hope you find the information helpful. Comment down below if you like this type of video, if you'd like me to cover any other stocks. And I hope to see some of you guys, if not all of you guys, at the Gigafest on April 7th. Until the next video, bye!